Hello, real estate agent Leah Courage here, and I made this video today for anyone considering buying or selling a home right now in autumn of 2024. Now, this is a longer video, but it is time-stamped on YouTube in case you want to skip forward or come back and rewatch different segments. So let's get started. September 18th, the Federal Reserve made a significant move. They dropped the federal interest rate by 50 basis points. And the Fed has all but confirmed that they will be executing additional rate cuts over Q4 of 2024, with possibly as many as 4 additional rate cuts by the end of December. Rates as of this recording, meaning mortgage interest rates, are in the low 6% range. And with additional rate cuts, we could see mortgage interest rates move into the high or mid 5% range even by the end of the year. Maybe next year. We'll see what happens. This decision is sending ripples through the real estate market, and I'm here to break down exactly what it means for you as a buyer or as a seller. So let's start with the basics. What exactly does a 50 basis point cut mean? In simple terms, a basis point is 1/100th of a percentage point. So a 50 basis point reduction means that the federal interest rate has decreased by 0.5%. This rate influences the interest rates that banks charge each other for overnight loans, and it has a cascading effect on various types of loans, including mortgage loans. So why does this matter? Well, when the Federal Reserve cuts interest rates, it usually leads to lower mortgage rates, which can make borrowing cheaper for consumers. This is where it starts to get interesting for both buyers and sellers in the real estate market. So first, let's talk about opportunities for buyers. If you're in the market or planning on being in the market soon for a new home, this rate cut could be a huge advantage for you. And here's why. Number one, lower mortgage rates. When the Fed cuts rates, mortgage lenders often follow suit. This means you could see lower interest rates on new mortgages, making your monthly payments more affordable. For example, if mortgage rates drop from 7% to 6.5%, it could save you hundreds of dollars per month on a typical loan, which can amount to thousands of dollars saved over the course of a year. Number two, increased purchasing power. Lower interest rates mean you might qualify for a larger loan amount, allowing you to afford a more expensive home or have more flexibility in your budget. This could be especially beneficial in a competitive market when you need that extra purchasing power to make a stronger offer. Number three, getting in before the market heats up. The timing of this rate cut is key. We're heading into a quieter season for real estate, good for you as a buyer, between now and the end of the year, and the market tends to slow down as people focus on the holidays and the upcoming election. This means that even with the news of this rate cut, there will be likely still less competition from other buyers than you'd see, for example, next year, giving you a much better chance to secure your dream home at a good price and more room to negotiate better terms with sellers. But here's the kicker. As we move into the new year and rates potentially drop even farther, we could see a surge in buyer activity, especially in the spring. So acting now in 2024 will allow you to get in before the rush and avoid the potential frenzy of a much busier market with even more competitive bidding wars in 2025. Number four, positioning yourself for future gains. By purchasing now, you're not just taking advantage of lower rates, you're also setting yourself up to benefit from future market conditions. As rates continue to drop, the value of your property could increase and you'll have a locked-in mortgage rate. And you could refinance down the line if you wanted to, if rates drop even farther. But it's all about getting ahead of the curve and making a strategic move while others are still waiting on the sidelines. Now, sellers, this is where things get very exciting for you. A rate cut like this one can positively impact your selling strategy in several ways. Number one, increased buyer activity. As I mentioned earlier, lower mortgage rates can lead to an influx of buyers entering the market. More buyers mean more potential offers on your home and possibly multiple bids that drive up the final sale price. Number 2, fewer days on market. In a lower interest rate environment, homes often sell more quickly because buyers are eager to lock in favorable financing terms. This could mean less time on the market for your property, reducing the stress and the carrying costs associated with a prolonged sale process. Number 3, opportunity for upsizing or downsizing. If you're planning to sell your current home and you're looking to buy another one, perhaps to upsize, downsize, or relocate, lower rates benefit you on both ends. You can sell your home more easily and secure a more affordable mortgage on your next property. Number 4, refinancing opportunities. If you own a home and you have a mortgage with a higher interest rate, it may be worth looking into refinancing. Not now, not at this very moment, but in the near future, as mortgage interest rates eventually follow the Fed rate and start dropping. By locking in a lower rate, you could reduce your monthly payments or even shorten the term of your loan, saving you money in the long run. However, sellers should also be aware that increased buyer demand could lead to more competition from other sellers also trying to take advantage of the market. So, as always, pricing, timing, and presentation are still key to a successful sale. Let's take a step back and let's look at the bigger picture now. The Fed's decision to cut rates is a response to broader economic conditions, whether it's to combat inflation, stimulate growth, or to stabilize financial markets. So this means that while the rate cut is good news for the real estate market, it's also a sign of the economic landscape that we're navigating. The chief purpose of a rate drop is economic stimulus. Lower interest rates can boost consumer spending and investment, which can be positive for the overall economy. When people feel confident in their financial situation, they're more likely to make big purchases like homes. But I have to mention market volatility because on the flip side, the Fed's rate cut could also be a response to concerns about economic slowdown, recession, or other financial pressures. So, while rate cuts can make borrowing money cheaper, it's very important to stay informed about the overall economic context and how it might impact your financial decisions. Here are the insider tips for both buyers and sellers to take advantage of this Fed rate news. For buyers, if you're ready, willing, and able to buy, right now could be an excellent time to dive in because mortgage interest rates have not dropped nearly as far as they're going to. So why would you buy now and not wait for rates to drop even farther? It's because you're going to have far less competition now than if you wait to see how low rates are going to go. Because guess what? That's what everyone else is going to do. And you don't want to be stuck in a multiple offer situation like we've seen over the last 4 years. Trust me, it's not fun. So what would I do if I was in your situation? I would home shop now and negotiate as long of an escrow closing process as possible. And I would float my interest rate and not lock it in right away. Or I would find a lender who would allow me one cost-free interest rate float down before I close. Why? By the time you need to lock in your rate to close on a home loan, mortgage interest rates could be significantly lower than they are today. Hence, the long closing process to take advantage of the rate drops. At the very least, buyers get a pre-approval now and have a clear understanding of your budget and how affordability could change for you based on mortgage interest rates going down. For sellers, my secret tip is this: you officially have more negotiating power, full stop. Why? Because rate reductions mean more buyer activity, and we still have an inventory shortage in Western Washington, and the demand is not going to go away. Now, why is this? It's because of millennial home buyers. The US has over 72.7 million millennials, and the millennial generation wants to buy homes. But there weren't enough homes built in the early 2000s to accommodate them, the largest generation of home buyers. So whether you need to sell now or you're planning on waiting until the spring market, we should talk, because John and I want to help you take advantage of this market and this massive opportunity coming up. And also, the Fed may have said that they're going to be methodical about their interest rate cuts, but the market is calling their bluff, pricing in 8 interest rate cuts over the next year. That's 1 cut for every Fed meeting. Can you imagine what that's going to do for buyer demand? I certainly can. It's going to go up. So, sellers, if you've had thoughts of selling, this could well be one heck of a year to get your home sold for top dollar. Interested to learn even more insider secrets? Reach out to me and let's strategize. At the end of the day, a 50 basis point rate cut from the Fed could very likely open up new opportunities in the real estate market, but only if you know how to take advantage of them. So whether you're buying, you're selling, or you're just exploring your options, we are here and we want to help you navigate these changes and make the best decisions for your future. So whatever you do, don't wait, and please reach out to us today, as it's never too early to start planning on how you're going to reach your real estate and your financial goals. Thank you so much for watching, and I truly hope to hear from you soon.